So guys, we're going over some banking and credit cards, and also maybe a little gardening. People really want to hear about it. I'm an expert gardener. Hey, hey, expert. Is that coffee really strong today? No?
I mean, it's good.
I'm like jacked right now. Like jacked. Jacked.
Because you're about to teach.
Maybe. The adrenaline pumping. I'm about to spread the good word of credit cards. How bad they are. How amazing they are.
How much you're encouraging me to use mine.
Yeah.
Actually, tomorrow my bill's due and I'm not going to get paid before my bill's due.
Just you have to make the small payment and then make the additional payment when you get paid. You can't not make a payment.
No, I know. I'm just saying I won't be able to pay in full.
Oh.
I still have like $8 to $9 in my account.
Okay.
But my
Yeah, you're gonna be good.
next year, my guaranteed amount. Do you think I'll exceed it?
Absolutely. They're gonna be so backed up on all this stuff. You're gonna have so many people are just gonna be chomping at the bit. People that push it off are gonna try to get in just in case it comes around next year. They're gonna shut everything down again. I'm sure people are just sitting there right now they were scheduled to come in right now, and now they have to live another how many months
With bad vision.
with bad vision. And
a lot of people that wait on it too long anyway, and now they're having to wait longer.
Right, and
but they also come in with the expectation that they're going to be able to get in, get it done, and our surgery schedules aren't full.
And that's why where you come in and release some of that. I think it's great. What's up, everyone? 10 o'clock. Oh, can we wait a moment to start? I'm using data right now. I need to log in. Absolutely. You get into that Wi-Fi on your PC. We'll wait a couple minutes here. Just discussing right now with my fantastic girlfriend. She just signed her paperwork to go to work as an ophthalmologist at a private practice in Austin, Texas. So we were just talking about all the excitement that goes along with that and what that means. We're doing a little personal finance as well, talking about finance. When you go to medical school, you get into a little bit of medical school debt, and you gotta work on that. You can take how long are loans amortized for? Like 10 years? 15 years? I think medical school bills are like 15 years. Like regular student loans are 10, but medical school, I think they're 15. They're trying to get as much interest off you as possible. So, um, my advice was to live modestly for the first couple of years and pay down all of that debt within the first couple of years. Because if you drag out medical school debt for 15 years, 10 years, you're paying just an obscene amount of money that you don't need to pay as far as interest. And in the long run, you'll be a lot happier. But you're still going to be able to live decently. All right. All right. I guess we're going to get into we're just going to review a debit card versus credit card real quick. Braden, you back on, buddy? Hopefully you're back on. Debit cards. We talked a little bit about banking and checking accounts, and a debit card is linked directly to your checking account. You swipe that debit card, it draws directly from your checking account. So if you're at the movies and you put $20 on your debit card, you don't have that money in there. Miss Miranda Vasquez, has a comment. Live in an apartment for 2 years and pay off your medical school bills. LOL. Is that what I said?
Yep, that's the plan.
Miranda, that's the exact advice that I gave our.
You can call me by my name, Kyla.
Dr. Ashenbeck. Kyla. My fantastic girlfriend. Anyways, so what we are doing here is talking about debit cards again. Debit cards are linked directly to your checking account. You take that out. That is not there. If you order something online from Amazon.com with your debit card, that money is taken out. If you have a problem with that product, or let's say eBay, and you need to send it back, that money is not going to be in your account. Okay, you might need to pay bills with that. You might need to pay a water bill, rent, some unexpected medical advice or medical expense could come up, and you don't have that cash towards you. So it is good. I believe that it is good to have access to credit, like a credit card, in order to make sure that your cash situation is solid enough so that, you know, if something does unexpected that comes up that you need cash, you're using that. And you can use a credit card, right? Like if you want to, you know, buy a couple things, but then pay that off right away. You want to make sure that you are responsible with credit use. So we'll just go over these pros and cons again real quick. Pros, payment is immediate, so you cannot possibly go into debt. If you do have some overdraft protection on that, you will actually go into a little bit of debt. Like let's say you put $100 on your debit card and you have $90 in there. They might cover that there for the first cover that $10. You are technically in debt for $10, but they probably won't let you go much over that, depending upon your account history and stuff. You don't have to carry a checkbook or show ID. You just plug in your debit card PIN number. Instant cash from ATMs and cash back options at some stores. You don't have to wonder if there's enough money in your account. Can be set up to prevent overdrafts. Cons, there's no free borrowing period, right? If you put something on a credit card, you basically get like 28 days to 30 days of interest-free borrowing. In contrast, that's kind of more the credit card setup. Should never be used to shop online due to high risk of theft. Once again, if someone hacks the data and gets your debit card number, takes out, let's say you have $1,000 in there and they take out 900, you're without that 900 until that fraud situation is taken care of. And that could take, months, right? You could not have that $900 for months. If you're banking on that, if you are relying on that cash, then that's a bad situation. Some banks charge transaction fees for using debit. That's going away pretty strongly. Actually, a lot of banks or a lot of banks want you to use their debit card. Also, different businesses would rather you use a debit card as well. No option to withhold payment in the event of a dispute with the merchant. For instance, if I use my American Express card, they can, if I have a dispute on something, American Express is great. They will stop payment on that. They will fight for you in order to get that resolved as soon as possible. All right, mobile payments, ACH. Mobile and ACH is kind of like if, for instance, MG&E does this, where I have an MG&E account and they draw directly from my checking account. So if I want to pay that bill, I put in my checking account number, my routing number, and we just set up an automatic withdrawal from my checking account every single month. It can be automatic. It can be manual, but basically it's just setting up through a third-party vendor an automatic withdrawal from your checking account. This is kind of a little bit on how it looks. All right, other mobile payment services. Apple Pay, PayPal, the Cash App, Venmo, MasterPass. Really don't use MasterPass that much. Most popular ones right now are the Venmo and Cash App. You can do PayPal you can PayPal someone. Really don't use that too much, but Venmo is the most popular one right now. And if we were in class right now, I'd kind of ask you, what is the attraction to Venmo? A lot of you might say the social aspect of it, to where if you go into, do I have my phone on me? I don't know where my phone is. That's okay. No, it's all right. I was going to show them. When you bring up Venmo, you can see like Sally paid Johnny for, and then it has like a bunch of taco emojis and stuff like that. You can keep Venmo payments private. You can request money on Venmo. But remember, if you're doing this like for a business, like let's say you're mowing someone's yard or something and they Venmo you, depending upon how much you make, you're going to have to report that to the IRS. Or the state revenue service. So you're going to have to make sure you keep track of payments and what they're for and things like that. I will have, for my daughter, another great thing about that is I can Venmo my daughter once she is old enough and where she has Venmo on her phone, and there's a debit card attached to that. So with Venmo, I can put that money into her Venmo account, and she can either Venmo someone else or she can swipe her debit card. So when she goes to college, I'm probably going to fill up a type of thing like a Venmo debit card. All right, this is just another look at different mobile apps. This is Venmo. This is kind of the social aspect of it. All right, direct deposit. So if you work for a company, direct deposit is one of those things where instead of getting a check, right? If I work for a company, some of them would give you a physical check on payday, and then you would go and put that into your checking account, and then it would wait for the funds to clear. With Monona Grove, we have direct deposit. So every other Friday, I get a deposit into my checking account for the amount that I need to get paid. It's a direct deposit from their account to mine into my account. So I don't have to wait for a check to clear. For instance, if I got paid on Friday, that check might not clear until Monday or Tuesday. This is a direct deposit. The funds are available on that day. All right. A lot of companies, a lot of corporations are going to that. If you work for a smaller kind of family-run business, sometimes they might just write you a check out of the checkbook, or their payroll company will do something like that. Well, they'll actually send you a check. You still get a copy of your stub, where everything. So I can go onto our little intranet deal for Monona Grove, and I can see how much was withheld for federal, which was held out for state, what's going into my retirement plan, which is being held out for my 401k, my different things like that, insurance. So you still get the information. It's just like an electronic form that you can access, or they'll email that to you. All right, credit cards. Credit cards, this is a slippery slope. And I will tell you, if we were in the classroom, I would be very honest with credit cards. And I'm going to try to be as honest as possible here. I'm not going to give you all the stories that I would give you in the classroom, but credit cards, that's a slippery slope. You need to be very, very careful with credit cards and credit. It's money that you can access, that you might not have to pay back right away, that you don't have to pay back right away. All you have to pay is a little amount. So like if I went to Ashley Furniture and I need new furniture for my daughter or something like that for her bedroom, and I want to buy her a whole new big bedroom set, and I might put $2,000 on my credit card for that, and my monthly payment might only be like $20 a month, or $17 a month, or $31 a month, depending upon your terms and your interest rate and things like that. And that may look really, really enticing. And you know what? If something comes along where you don't have a lot of money, a lot of cash available to you right now, and your car breaks down and you need $2,000 in order to fix your car and to get to work so that you can continue to make money, yes, you may have to use a credit card. But if you're doing stuff like credit cards with furniture, or a trip to Vegas, or presents at Christmas and things like that, you really, really, really need to be careful about how much you're spending and how much you're putting on. Don't put on your credit card more than you can pay off the next month for stuff like that. Yes, you may have to leverage a little bit of money. You may have to use credit. That's what leveraging means. You may have to leverage a little bit of money to get yourself out of tight situations like your car breaking down or a medical expense. But if you start using it for furniture, trips, parties, whatever, you're gonna run into a big problem, and I don't want to see you guys get into that. All right, what is a credit card? A credit card is a revolving loan that has a spending limit, requires monthly payments, and you receive a statement each month. Interest is charged on the unpaid balances, and it's not linked to your bank account. As opposed to a debit card that's linked to your checking account or credit union, and funds come out of your account immediately. Okay, what's a revolving loan? Revolving loan is if I have, let's say my credit limit is $1,000. Okay, so if I put $200 onto my credit card, my credit limit is $1,000. I can only spend another additional $800, right? And if I pay off 100, I still have 100 balance, and I can access $900. Let's say I put another $500 on top of that. Then my balance is $600, and I can only access another $400. And they're charging interest depending upon what your monthly balance is for that month. So for that first month, they're charging me interest on $200. On the second month, they're charging me interest on $100. And then on the third month, they're charging me interest on $600, right? If I don't pay it all off. If you make little payments over time, it's going to take you, if you just do the minimum payments, it's going to take you years to pay off, right? They set it up so that it's manageable enough to keep enticing you to use more and more credit, but just to pay off a little bit and keep charging you interest. They want you in that cycle, and that's a dangerous thing. Now, some people can use credit cards responsibly, where if I want to buy furniture for $2,000 at Ashley Furniture, I know that I can pay that off the next month, and I know that I can pay that off the next month. I might use my credit card because of some sort of like balance or some sort of reward, like 2% cash back or some miles or some sort of like different things um, like trips that you can get, stuff like that. Then yes, you can use your credit card for that type of stuff, but you have to make sure that you hold that credit and your balances. Those are very important to determine the rest of your life. If you use that bad, it's going to take years to get out of that, right? And to get your credit worthiness back to the point where it should be. All right, so how they work. Credit card, you borrow money from a lending institution and pay some of it or all of it back each month. When your card is swiped, the credit card company pays the vendor for the purchase. They also charge that vendor for that convenience. Okay, so if I own a coffee shop, you pay me with your credit card. Okay, you swipe that. That lending service then puts money into my account. All right, $10 at a coffee shop. I get that money is from the lending company, gets put in my account, less about 2 or 3% or 1%, whatever my agreement is with my payment service, with my transaction service. I would get $10 less, whatever that is. So credit card companies are making money off of your interest, and then also off of the small little coffee shop that you're swiping. All right, that's why you see a lot of like minimum amounts. Like you have to spend $10 if you're going to put it on a credit card. Otherwise, you just took away all the profit that I had on this cup of coffee. So if you're buying a $3 coffee at a small coffee shop, the transaction fees might be 50 cents or 75 cents or 3%, whatever is greater, right? So you might have just taken away all their profit on that. That's why you see those types of things. Access to funds. You have a limit on how much you can borrow, typically based on your credit history. You guys going out to get a credit card right now might only get a credit card for $500 or $800, right? And you might, just put gas on there and then pay that off right away. And the more and more you do that, then your credit limit will continue to rise, will creep up. Next thing you know, you have a $2,000 credit limit, and you've been very responsible, but they're enticing you. They're like, well, you can spend a little bit more. You've been really good at paying it back, and they're just going to kind of creep that up. Debit cards, it takes money out of debit cards, it takes money directly from your checking account. When your card is swiped, the funds are transferred from your account. Access to funds, you can access only as much as is available to your account or face potential fees. So credit cards, you only have access to a certain amount, and debit cards, you only have access to a certain amount. Debit card is a certain amount that you actually physically own. You have. Credit cards is the amount that they are willing for you to borrow from them. Pros. Advantage. Make a purchase even if you don't have cash on hand or in your account. Debit cards, access to cash, not only ATMs, but you can also get some cash back at points of sale. For instance, if I go to Metcalf Century and I pay with my debit card, I have the option to say like, do I want an extra $20 in cash for whatever? I can do that. I can take cash out on top of the groceries that I spent with a debit card. No interest charges because you're not borrowing any money. You worry less about how much you're spending, about how spending will affect your credit score. Spending advantage, you can help curb overspending since the limits are more concrete and you can likely track your activity. And all these things you can, whether it's your credit card or your debit card, you can plug into your Mint app, or you need a budget app, or one of those budget apps, you can actually use those as tools to see what you're putting on your credit card, what you're putting on your debit card, itemize those things, and budget for later. Cons: credit cards, especially for you guys, will have high interest rates. Average fixed rate for average percentage rate for a credit card is about 13%. Now they're going to tell you for the first 3 months or for the first year you have a 0% interest rate. But then I'll tell you how to look for what your interest rate is going to be like after that initial trial period. Fees: you may get fees for exceeding limits, making late payments. Ross, what did you say, buddy? What, you retracted a statement. I want to see what it was. Spending disadvantage. Can be easy to go over budget. Absolutely. If you're budgeted for $400 for the month in groceries, if you're just swiping your credit card, you could easily go, that's not a tangible amount of cash that you have in your bank account. You could easily kind of be like, you know what? Let's just go a little bit more on groceries. Let's do a little bit more on dining out. You know what? Taco Bell sounds like a good idea right now. Debit card. Cons for a debit card: you do not build your credit history or improve your credit score. Fees: overdraft. You may be able to withdraw on what's in your account, but you're likely to be charged. Charged fees. Okay, Ross, I should be able to deny my services for any reason. What are you talking about? With a debit card or credit card? Spending disadvantage. A transaction should be declined if you try to spend more than you have in your account. I mean, that's kind of on both. If you have you ever gone to like the Quick Trip and you only had $30, but you're not quite sure if you had $30 on your debit card, or hopefully none of you have a credit card where you're like, I don't know if I have enough credit, but I'm still going to swipe it to see if I can get this, to get whatever I need at the grocery store or whatever. Both of those have, you can run into that on both sides, on both credit cards and debit cards. If you go over your limit, or if you're close to your limit, or if you're close to spending all the cash in your account. Barry Goldwater, nice, Ross. All right, tips for using credit cards. Always pay your credit card off in full each month, or at least pay the minimum fee if you can't pay it off at all. Make your payments on time every time. Okay, so let's say I spend $1,000. I have $1,000 balance on my credit card this month. All right, my minimum payment might be $25 or $30, something like that. You really, even if you don't have that $1,000 to pay that all off, you have to at least pay that $35. Figure it out. Make that payment, because yes, you might be carrying a high balance, but you're not going to get that slash against you, or that strike against you on your credit report for not making at least the minimum payment. So I would say when you guys first start your credit history, get your first credit card, just put on your credit card what you can afford. Okay, just the gas, just the groceries that you have budgeted for, and then make that payment in full every single month. And yes, credit cards, in order to build your credit, you need to hold a little balance and play that game. Just to get into the habit right away, just pay off your credit card bills in full every single month. Once you guys start getting a credit card, make sure you're spending within your own personal budget and within 30% of your line of credit. Right? If you go over that 30%, that's gonna hurt your credit. All right. If you say 30%, 35% and below, that is going to, you're still going to be in that sweet spot of helping your credit. Never spend more than you can afford to pay back. And don't get caught up in trying to earn rewards. Your rewards are worth nothing if you carry a balance. Any cash back that you think that you're going to get, if you get 2% cash back and you spend $1,000 and then you're paying 20% interest on that for the entire year, you get anti-rewards, you get negative rewards. They're just trying to entice you to use their credit card. Like the people that win in credit cards are people that are very disciplined, that can use this to their benefit. And it might be a small benefit, but it's some benefit. But they're looking for the rest of us. They're gonna be like, oh yeah, that's good. I get 50,000 points if I sign up for this credit card at the Brewer game, and then I can go on a flight to Cancun and put more money on my credit card. Absolutely, sign up for that and get ready for a long time of paying off that whole situation. All right, they're trying to get you. They're not in it to be your friend. They're not trying to give you something nice. They are in it to make money, and you are not going to come out ahead if you buy into these things, if you're irresponsible with it. You have to know your own limitations on debt. For instance, when I first started out, was irresponsible with debt, and it hurt my future as far as borrowing money for things like a car or a house. Did I go too crazy? No, but I still made some decisions that weren't the best for my financial future. It's very easy to get caught up into this. So rewards, it doesn't matter what the reward is, it's not going to be good unless you pay it off in full every single month and you stay 30% or below on your spending. The Schumer box. This is the meat. This is the meat and potatoes of what you are actually getting into. So, for instance, if I go to the Brewer game and I get a bobblehead doll for signing up for a credit card and I get 25,000 points, and then I can go to Cancun and spend more money at 0% interest, and then I can transfer the balances of my other credit cards for 0% plus 2%, whatever, into this credit card. Yeah, that all sounds great, but what happens when all that introductory stuff goes away? So if we look up here, annual percentage rate. Let me see if I can make this a little bit bigger for you guys. All right, so the Schumer box. Annual percentage rate, APR, 8.9%. Whoops, what's going on? 8.99%, 10.99%, 12.99% introductory for 1 year based on your credit worthiness. They may say you have the potential to get 8.99%. You're not going to get that. You guys starting out, you guys are going to be up at the higher end for APR. Someone like myself, if you have a good job, if you have good credit, you might get into the 8.99%. But trust me, they're going to figure out any way that you're not paying 8.99%. They're going to get you up into the higher ones. After that, right here, it says after that, your APR will be 14.99%. This APR will vary with the market based on the prime rate. They're going to do their calculations based off whatever the credit prime rate is at the time. And we can get into that later. But basically, that 14.99%, that means that could go up to 16.99%, depending upon the market for the prime rate at the time. Maybe for you guys, after your initial introductory rate, you're going to end up probably at like the 21.99% or 19.99%. Like with youth, they feel that they can prey on the youth in order to get in order to get more money, access to more money for their credit card companies. APR on balance transfers, 15.99%. And then after that, it'll be adjusted. Cash advances. Yes, you can use your credit card like a ATM machine, but you're going to pay 21.99% if you swipe that. If you need $100 real fast to go out to the clubs or whatever, you swipe your credit card, guess what? You're paying 21.99% on just that swipe. Well, let's say, I'm going to go pay that $100 back right away. guess what? If you go and you pay, if you have like $1,000 on your credit card and you go give them already and then you go swipe it, that's going to be the last $100 that they pay off when you make your payments. They're going to go from the first transaction all the way to the last transaction to pay off whatever that is. That might be 10 transactions down the road. Penalty APR when it applies. If you don't make your payments, you're going to be paying, you could be paying up to 29%, 28.99. It's like gas prices, right? Why don't you just write 29% because they want to get that little extra nudge in there. This APR may be applied to your account if you make a late payment, go over your credit limit, make a payment that is returned, do any of the above on another account you may have with us. So if I have a Capital One Venture card and then a Capital One whatever card, and I make a late payment on this one, but not this one, my interest rate could be affected on both, right? So you have to be careful on, okay, if I'm going to make a late payment on this one, maybe I don't pay all of this one off. Maybe I take some of that so I at least make a payment on this one over here. You have to make sure you are careful with what companies and what credit cards you're getting. How to avoid paying interest on purchase. Okay, this right here, number 5, very important. Your due date is at least 25 days after the close of each billing cycle. We will not charge you interest on purchases if you pay your entire balance. If you pay your entire balance at 25 days from the date of each transaction. Okay, so you need to pay those off right away. Okay, and you won't be charged any interest. Then your rewards are worth something. Your 2% cash back or your miles, those are actually worth something if you pay it all back. Once you get up into 20% interest or even 10% interest, I mean, there isn't a stock right now. Well, there are some stocks that would pay like that you could make 10% interest on or 15% interest, but the credit cards are guaranteed they're going to make this interest off of you. Guaranteed. If you don't pay it off. Minimum interest charge. You'll be charged interest no matter what. At least $1.50 or whatever. To learn more about the factors of credit cards, you go to this link right here. That's the Schumer box. That is the small fine print on the back of your application. That tells you exactly what, where, when, why, and how. You have to make sure you look at that. So when that guy is showing you that title towel, that you can get, or the free T-shirt at the Bucks game, or the bobblehead doll, or the 50,000 thing, 50,000 miles, say like, here, read the back of it. Let me see your Schumer box. Then read the back to him and say, do you think this bobblehead is worth this much money if I'm carrying a balance? No? Take this application, take your bobblehead, toodaloo. All right, once again, APRs, late fees, annual fees, other penalties, minimum interest, charges, grace periods, transaction fees. Those are all in the Schumer box. A line of credit. So a line of credit, your credit limit equals the maximum you can charge, all right? So if I have $1,000 credit limit, I get a credit card and I have $1,000 limit, that's the maximum I can put on that charge. And that includes the interest that they charge. So if I have $500 on my credit card, they'll add the interest. That doesn't increase my credit limit by that much. That takes away my credit limit. Don't spend more than 30 to 35% of this. If you get over that, it's going to negatively affect your credit score. Keep it 30% or below. Keep it 25% or below. Just keep it below. Make your payments on time, please, please, please. So if your credit limit is $1,000, do not spend more than $300. Okay, do not put more. Do not put $700 on your credit and then pay it back the next month. Keep it $300 or less. All right, pay off your credit card in full before the grace period is over. Don't carry an outstanding balance. All right. These are the companies: Visa, MasterCard, American Express, Discover. Obtaining a credit card. How does one get a credit card? If you're under 18, you gotta or have poor credit, you're gonna have a co-signer, a joint account, or an authorized user. Rewards, how it works: cash back, points, gift cards. You can turn those points into gift cards later. Your credit card statement. So every month you're going to get a credit card statement. This is the information on a credit card statement. Summary of account info. Your payment information, warnings, transactions, interest and fee calculations. All that is right here. So on one of the effort assignments that you guys don't have to do, but if you do it, I strongly encourage you guys to do it, okay? And this stuff will be on the test too, so this is just extra practice. It'll have an item on there where you're going to kind of take apart a credit card statement and figure out what's important on it. All right, just a couple more slides, and then we'll be done here. So credit card commercials, let me just go here. All right, credit card commercials. So this is the last thing that I'm going to say about credit cards for the time being. We have very recognizable people with great voices up here. These people are trying to make you feel comfortable with getting a credit card. They are not your friends. They do not care about you. They do not care about your financial success. They get paid because you use credit cards bad. These guys have a job in this capacity because we as a society use credit cards like jerks. We do it wrong. And the credit card companies see that we do it right, and they want the best voices. Samuel L. Jackson. I would listen to that guy tell me a murder story every single night to put me to bed. I would have him sing the song of, like, you know, the most horrible thing in the world, but I would fall asleep to that because his voice is just so calming and so effective, and it's amazing. He's not there to help me. He's not there to help you. He's there to get paid, and the only way that he gets paid is if suckers like you and I get credit cards. I was a terrible credit card user. Absolutely terrible. I actually have not had a credit card in 3 years now. I was like, screw this. I'm doing everything in cash now. And I am sticking to that for at least the foreseeable future. I want to build up cash. I want to build up liquidity. I don't want to get stuck into a situation where I'm going to have a bad time, or if I'm going to have to work my ass off in order to pay it off and pay it off. It is a slippery slope. I'm a good guy. I'm a nice guy. You guys can trust me. If you guys need anything, you can always come to me, right? Like, I'll talk you, I'll give you that support. I'll pump your tires, whatever. But I was terrible with credit cards. Does that mean I'm a bad guy? No. I had bad credit. Does that mean I'm a bad guy? Absolutely not. If you get stuck into this, if you have these problems, it's okay. You're going to get through it. You know, I think Summit has a great program to help people get out of credit card debt. Other people, there are good financial coaches. I'm not a financial coach. I just know what worked for me in order to get out of the debt. But you guys, if that happens to you, it's okay. You just have to start to make a change in your life in order to get out of this. These people right here, they don't care about your future. All they care about is getting paid. Earn unlimited double miles. Hey, great. Whatever, is that Jennifer Garner or whatever? Thanks. Oh my God, I can't wait to earn double miles. And make sure that you get paid by using my credit card like an asshole. Okay? You can't do that. Please, 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 like, start from the beginning. The first time you guys get credit cards, just do it right. It sucks. You're going to have a ton of money available to you, but just do it right. And you will live a happy, happy life, okay? All right. What credit card is best for you? So I'm going to post this in Google Classroom. This is an effort assignment. In our new situation, you don't have to do it, but it's good practice. This is free practice for you guys to figure out what kind of credit card you would actually choose. All right, and if you have any questions, you can email me, text me, call me, and we'll go over this. But you're gonna you're gonna find 3 different credit cards. You're gonna Google them up. You're gonna find a couple different 3 different credit cards, and then you're gonna compare them. And after doing so, you're gonna choose what card meets the needs, and you're gonna write a brief analysis as to why this is the case. Again, you don't have to do this assignment, but I would suggest that you do. You're 18 years old. You don't have a credit card right now. You might as well see exactly what the situation is right now. Once again, guys, I'm available by call or text as soon as I find my phone. Please reach out to me if you need to. Do these assignments for extra practice. It's not required. Basically, the knowledge and skills to test stuff is required now. I miss you guys. I wish we were in the classroom. I wish I was giving you all my crazy stories, but there's no way I'm putting them out on the internet, on YouTube. But you guys are the best. I'm really proud of all of you, and obviously let me know if you need anything. All right? Have a great rest of your day, and I will talk to you guys later. Bye.